There'd be price appreciation in Bitcoin. It would be good for everybody involved in crypto. But we can't do it without policy. And so everybody should just get off this let's be rogue, let's be crypto cowboys. Forget all that crap. It's time to get this. Well, as you know, the Lummis bill has dropped a couple of hours ago. It's been long awaited. This is a bipartisan effort, very important. It sets some parameters around whether, chains or commodities or securities. It contemplates all kinds of different attributes such as stablecoins. And it's important to get this off the ground. This dialogue has been sorely needed, but it's not the only bill. There's also the Haggerty bill, the Toomey bill, other initiatives going on. So you've got a lot of policymakers finally addressing this issue for the first time, basically, knowing that there's a huge institutional demand waiting to get involved when they finally bring policy forward. And I'm just here to be part of it. There's many private citizens involved. It's important to get to Washington, important to talk to these leaders, important to give your ideas. They're basically soliciting the industry, and I think that's important. So, what I'm suggesting, and I'm just one voice, but I try and say this over and over again to policymakers, is let's pick one thing. I mean, the crypto universe is so broad, it's so huge, there's so many different things going on at the same time. Let's bring policy on one thing and get that done. And what I'd like that to be is stablecoins, because as a payment system right now, it would be very, very productive to bring forward some policy on stablecoins and let the market compete. Now, I personally prefer ones that are backed by hard assets like the US dollar, but there's many ideas out there. Some work, some don't. Obviously, what happened with Luna was a bad outcome, but that's okay. This is a nascent industry, and we're trying different ideas, but the need for an international payment system is so huge and such a huge opportunity to save costs, to provide transparency, auditability, liquidity, speed, all of those things. That's what I'm suggesting. Let's pick one thing and bring policy on stablecoins. Let's nail that, and then we'll move into Bitcoin, we'll move into blockchain, we'll move into other things, but NFTs, but let's nail one thing. In other words, we got to move forward on something here, and I'll tell you why. For all of the people in the crypto universe, and there are many, that don't think we need regulation, let me point something out that would get everybody on board. It's a very simple quantum mathematics, and here's how it works. The majority of invested capital on Earth is held by sovereign and pension plans, about 90+% of it. They own zero crypto, nothing. And so for all the excitement about Bitcoin, 800 billion, that is absolutely a giant nothing burger. It is totally irrelevant. It's not held by any institutions that matter. Now, I'm an indexer, and I've talked about this many, many times. There's many indexers in the world, but we service sovereign funds, pension plans. Let's say you're an oil-rich country in the Middle East. You're making 250 million cash a day, US dollars, in oil revenues. You don't want to reinvest in oil. You want to invest in every other sector. So they'll go to an indexer like me and say, index the S&P 500, less energy, less airlines. That's the kind of index we do. And so we see these fund flows, trillions of dollars of fund flows every year just going through the system. Indexers see that every 24 hours. And I always ask these institutions and these sovereign funds, what allocation would you put into Bitcoin? Just one. Now, when you're running a $1 trillion mandate or an $800 billion mandate, which is some of the size of these funds, that's a ton of money. And that's a huge amount of demand that would come into the market. And as Bitcoin prices went past that 1% allocation, let's say, they'd sell it back down to 1%. But just importantly, if it dropped below 1%, they'd buy it back up. So there'd be an eternal bid forever. The volatility would drop dramatically. There'd be price appreciation in Bitcoin. It would be good for everybody involved in crypto. But we can't do it without policy. And so everybody should just get off this let's be rogue, let's be crypto cowboys. Forget all that crap. It's time to get this real and get a tremendous amount of capital going into crypto because it's policy and it gets regulated and it's good for everybody. Because the largest economy on earth is financial services. I think crypto will be the 12th sector of the economy within 10 years because it adds so much liquidity, so much productivity, so much transparency, so much auditability. It's so much better than what we're doing right now, which is so expensive and so slow. If I want to transfer capital over to Zurich to buy Nestle stock in Swiss francs, it takes me days. And it costs me a fortune, and it's incredibly inefficient. I could do it in 2 seconds with a stable coin, and I can't yet because we don't have policy on both sides of the ocean that let me do that, but it's coming one day. And I think crypto and blockchain and the services and financial transactions, microtransactions, all of it are going to lend itself to this blockchain auditability, transparency, the ledger system. It all makes sense to me, and I think regulators are starting to figure that out. Now, as an investor, I don't know which of these chains is going to win. Is Solana going to beat Polygon? Should I be in Pollen? My strategy is to do the same thing I do with stocks. Get diversification. I own 32 positions, 32 chain projects, 32 different coins and tokens. I have no idea which ones will win over the next 5 years, but I don't need them all to win. I just need a few to win, and that's what diversification is all about. And I've made some investments in the infrastructure. You know that old adage in the gold rush, you were better owning and selling picks and shovels and jeans than you were trying to find gold, because that was very hard to do. The infrastructure of crypto are companies like FTX, I'm a shareholder, Circle, I'm a shareholder, Wonderfy, I'm a shareholder, Immutable Holdings, I'm a shareholder. I've given money to all of these projects because they make a lot of sense to me and I use them all. And they're centralized, decentralized. There's stable coins in there. There's the FTX platform, which is the first compliant institutional platform I can find that my auditors and my compliance department finally agree to let me use to store value. And those are the kind of things that really matter to me. And I have to disclose, yes, I'm a shareholder in FTX. I'm also a paid spokesperson. So I'm eating my own cooking, but I'm also talking about the merits of their compliance platform. Basically what's happened to me is I've been layering in now for 36 months. I started at 2.5%, went to 7, then we went past 15. Now in portfolio theory, if you're running, a mandate such as a sovereign fund, let me give you the rules by which those big boys play. And I'm using the same philosophy for crypto. We have 11 sectors in the S&P 500. Portfolio theory would tell you never more than 20% in any one sector, never more than 5% in any one stock or bond. That's diversification, and that's basically how 99% of sovereign wealth is managed by indexers like me and many others that are like me. And so I've done the same thing in crypto. I've said, okay, I think crypto will be the 12th sector of the economy in 10 years. I'm going to treat it that way now in the operating company. That means I can put up to 20% of our operating capital into the crypto space, and then I want diversification. So I've basically done exactly that. My largest holdings right now are Ethereum and Bitcoin. That's not a big surprise, but that's a challenge. You can't get your compliance department on board because they say, show me the policy. Well, there is no policy. That's the problem. Is it FDIC insured? We don't have that yet. We've really got to get this stuff nailed down. That's why I keep telling everybody, get behind policy, because you're going to get a whole lot more capital into this space. There's 52 billion already in USDC. Tether's out there. That broke a buck, so I can't touch that. And of course, Luna was insanity. Well, we now know algorithmic-based stablecoins, well, they don't work so well, do they? So the market will figure that out, and they'll basically adjust accordingly based on risk and return. I look at it this way. You talk to any grad coming out of MIT or Waterloo or Temple or McGill or any of these really high-end engineering colleges and universities, and a third of the engineers all want to go onto the blockchain. You can't take that much intellectual capital and not expect some incredible outcomes 3 to 5 years from now. So you want to invest in some of these people. These are the smartest hands over keyboards all around the world. They're not working for the traditional industries. They're on the chain. And that means there's going to be a lot of productivity there. That's what you want to bet on. It's like betting on Steve Jobs when he was just drawing fonts with a felt pen. That kind of idea. It's the same thing going on now. These guys are going to be big productivity for the economy, and you've got to put your money behind them. People keep saying institutions are involved, but they're not at all. And so if we get one of these bills passed here in Washington, which is why I'm here, I would love to see this agenda item move forward so it can be decided on after the midterms. I'm sure Biden's very, very busy on other issues right now. But this isn't going away, and these senators and congressmen and women know this, and that's why they're bringing these and advancing them. All of these senators are all over cable TV today talking about this bill dropping, and it's not the only one. And certainly many of them will be discussing it in the weeks ahead. But the point is, as an investor, do you want to be ahead of this or behind it? Because I think what happens is you get a binary increase in the value of crypto the minute people even sense policy. And that's going to happen sometime Jan, Feb, March. And so I want to be positioned before then. You don't have to, but I think it's the way to go in terms of being early and nascent. It's like being involved in the internet in its most early days. Same thing is going on here. Long term, it's a great investment, but boy, volatility, yeah, it's tough. 50% up, 50% down, 60% swings. Well, that was Amazon 12, 15 years ago. Now it's Bitcoin today. One word, education. This is the most misunderstood sector of the economy that's ever existed because of the complexity of how it works. Basically, policymakers do not understand it, and when you don't understand something, you tend to mistrust it. It requires education. It's taken me years and a lot of hours of reading and a tremendous amount of travel to get to the place where I'm comfortable making these investments now and understand how this works. But that's not easy to do. And the whole idea of a centralized and decentralized wallet, very many people don't understand the differences between it. And yet you need both in the crypto environment. And so I tell people, look, start slowly. Now, for me, USDC has become a very powerful payment system. More and more time is going by and vendors are willing to take it. I'm willing to take it. When people want to pay me for goods and services in other countries, I say, give me USDC if you're allowed to. Don't ACH me any capital out of a bank. Don't send me Swiss francs, euros, or British pounds. That's just a total headache for me. Go figure out USDC and I'll take the risk myself on it. But that's going to take a long time to happen. I tell everybody this is the future of currency. It's the future of payment systems. It's the 12th sector of the economy. Get over it and start learning about it. Before the pandemic, if you were 65 years old sitting in a condo in Miami Beach and you never used your phone to order groceries, well, now you do, because otherwise you would have starved to death. You figured out how to download one of those apps and start ordering food. And now you're totally hip to it. And you live your life on your phone. And that was because you had to. The same thing's going to happen in cryptocurrency.